afternoon, everyone, and thank you for joining our panel discussion about the Forex market outlook. As 2025 unfolds, the Forex market stands at a crossroads shaped by inflationary pressures, central bank recalibrations, and shifting geopolitical dynamics. We are so lucky to have some experts with us today that they will give us their insights on the topic. But first, let them introduce themselves to see with who we are today.
Okay, thank you so much, Andrea. Hi guys, good afternoon, and it's great to be back in Abu Dhabi. My name's Jamil, I'm the Chief Analyst at GTC. I've been in this industry now as an analyst for just over 10 years, and I was trading before that. I think it's a very exciting time to be talking about such incredible trends. I think that this financial market now and the volatility is spectacular, but of course, with such volatility there comes risk and also the need for further client education. And with that in mind, I'm very excited to be on this panel, and I hope all of you find the insights insightful.
Thank you. Ziad.
Hello everyone, I'm Ziad Malham. I'm the Chief Marketing Officer at CFI, the region's leading broker. I'm happy to be with you here in Abu Dhabi. At CFI, I'm responsible for everything related to marketing and branding across the group level. Hopefully, we'll be able to add some value today in the conversation. Thank you.
Thank you. Naim.
Thank you, Andrea. And hello again. My name is Naim Azam. I'm a CIO at Zay Capital Markets and also founder of Golden Gate Public Relations.
Abdallah, thank you.
Good afternoon, everyone. My name is Abdallah Najada, and I am the Business Development Director for Ingot, which has been in the market for a long time, and we are seeking the global to become the most global brokerage in the world, inshallah, very soon.
Thank you. So let's start immediately, as I'm sure everyone is excited to hear your insights today. Jamel, if I can start with you, what macroeconomic shifts are expected post-Ramadan in MENA and globally, and how could this influence FX flows?
Well, I think we would all agree that this world is certainly unpredictable. Some would say a little bit wacky. How can I use a metaphor? What's happening now in financial markets with the trade tariffs, the trade war, however we're going to phrase it, it's like a TV show. But none of us know how this series is going to play out. There's many plot twists. Nobody knows what tomorrow can bring. And that's partially why we have such unforeseen and spectacular volatility. Let's see how this series plays out, whether it's worth watching, whether it's going to have an anticlimax. But certainly for now, this is a very interesting field for traders, for investors, of course for brokerages. But volatility is very high, and we should always warn potential audience about investing during high periods of volatility. But at the same time, there's still opportunities there. Let's see how this series plays out.
Thank you so much. Naim, if I can come to you. With the Fed and ECB signaling mixed messages, how might diverged rate paths affect major currency pairs like USD, Euro, UST, and Japanese yen currencies?
I'm going to build up on something where Jamil kind of left off and from the last conference in Dubai. It was very clear, under the new administration, we're going to live from headline to headline, and that is from tweet to tweet. And then that is what's been going on for the last 3 months or so since Trump administration is. And I think that is also going to be the trend. This represents an opportunity across the globe, no matter which particular market you are trading, which particular sector that you are trading. The opportunities are there. A lot of people that we spoke to earlier today in the conference, the common theme was that a lot of them they're saying that we actually bought the market 2 weeks ago when everyone was panicking, and that was the opportunity. Now the question that they wanted to know is, are we going to go up from here, or is the path is?
Jamil is ready to jump in on this.
No, I'm here to support Naim. I was with Naim 2 weeks ago in Mexico, and he told me the exact same thing.
So the question really relies on two things. Look, in the last, let's say, 3 or 4 weeks, the market dropped on every single headline that related to tariffs. Do we all agree with that? Started from a 35% and all the way to 245%. Now, as the cycle begins of a de-escalation of these tariffs, which I believe it will begin now, market is going to, and this is very important that you guys pay attention to, on every headline of a tariffs going up, the market declined. From the Treasury Secretary and from the Donald Trump, what we have learned is that this is going to be a marathon rather than a short sprint. That means there's going to be still art of war being played out. Slowly, gradual reduction of these tariffs. Each headline would represent an opportunity to go to the upside. And very briefly, the second one, rather than going into the politics and talking about trade war, that everything happened because of the supply chain disruption fear. People do believe that, okay, US is not capable of doing that, of producing products. The main reason and the component behind that is your labor cost. If I'm wearing a suit, the stitching is expensive in the United States. If I'm wearing if this is the fabric, to make this fabric is expensive because of the labor cost in there. We are in an era of AI automation, and that means an era of a new trend emerging. And this new trend means countries like the United States and Europe, which are on the forefront of this one, will eventually bring the cost at a lot more lower price than what we will see in China. So, to answer the question, I think this is an opportunity in the market, and not to kind of getting confused from the companies which have a solid business cases. They will bounce back, and this is not the time to sort of sit back and not to look at those particular companies.
Thank you, Naim. Moving to Ziad, how are geopolitical tensions shaping seven heaven flows in the FX markets?
Well, when it comes to geopolitical tensions, they always affect, the behavior of traders and investors. In such situations, usually traders or investors move their positions to safe instruments or safe assets like gold or US dollars, and sometimes to even regional currencies like the UAE dirham, which are usually pegged to the US dollar. But let me approach it from the brokerage perspective, or from as a financial institution. How do we see this behavior is changing, mainly in the recent tensions? What we see, and is significant this time, is that it's not only anymore about the defensive trading positions nowadays. So true, when you have these tensions happening, let's say, for example, the prices of oil or the prices of indices are moving and there is volatility, we started to see traders and investors looking for the opportunity to benefit from this volatility that's happening, and not focusing only on risk management related to their open positions. And I'm saying here what we see from the back end. And usually this kind of behavior, or this kind of behavior nowadays, is a little bit new from a frequency perspective. I think also the way things are, are happening, it's because traders are able to react in a smarter and faster way when it comes to these movements. So not only during geopolitical tensions, you see people hedging their positions with instruments like gold or Japanese yen or even other safe haven assets. You see them very active also in the market, searching for this opportunity and trying to benefit from it. I think nowadays technology play a very important role, because the mobile access to the global financial markets, the speed of execution, the ease of access to information and news, the ease of access to insights is actually enabling mainly retail traders and investors to kind of act live while the action is happening, almost in real time. So for us, from the brokerage side, as we're looking at this behavior, we think nowadays it's not only about safe havens during geopolitical tensions. True, it is about safe havens, but as well as it's also about speed. It's about the opportunity that's out there, as well as the confidence that the traders and investors are gaining, maybe due to the increased level of financial literacy, due to communication, and more than that.
Thank you, Ziad. So moving to Abdallah, how should corporates and institutional investors adapt their hedging strategies and potential interest rate cuts or geopolitical shocks?
Basically, the institutional investors starts by increasing their hedging strategies against the currencies and also against the commodities. And they move towards the safe havens, and especially increasing by the derivatives, whether it's through futures or through options. The second thing is that they go into lowering the fixed income cost by investing into more lower fees fixed income instruments, in addition to lowering the acquisition cost of their investments in their investment portfolio. This is for how do they act on their hedging strategies. While on the geopolitical events or geopolitical shocks, basically they increase their investments similar in the safe havens, whether it's the gold, where it's the very well-known Japanese yen, or any investment basket that might be absorbing the geopolitical shocks in a positive way in order to reduce the risks.
Thank you. Going back to Naeem, do you expect a spike or easing in the currency volatility post-Ramadan? And which currency pairs are flashing the most opportunity?
You know, if someone would have asked me this particular question a few months back before Trump came, we would have said that the dollar is going to go up because he's going to support the dollar. And we were clearly wrong about that particular element. Obviously, we know where the dollar has been trending. Something that Ahmed said and Jamil said earlier, I wanted to build on those particular things. During the time of volatility, safe haven becomes very, very important. We've seen a shift from the dollar because of the trade tariff for other currencies. Other currencies such as sterling, such as euro, and the Japanese yen and Chinese yuan as your other safe haven currencies, as your other alternative currencies, as the trade war brews and it continues to remain anchor in place. Though the question which comes to your mind is, okay, in times like of these ones, is there a place for other safe haven assets? The natural question, the answer comes to you, is your gold, because we have seen the massive rally. And again, if someone would have asked me before Trump, is gold going to continue to go up? My answer was no. Gold will drop, equity market will go higher, and dollar will go up, because that is what Trump is going to do. But that's not what happened. We saw all-time highs in gold, not because of retail investors primarily supporting it, because of countries diversifying their own reserves. Now, the last and the final question within that investment thesis which comes to mind is, what about Bitcoin? What happened with the Bitcoin? Because that was supposed to be your ultimate safe haven asset as well. And now, only recently, Bloomberg has started to label that as a safe haven currency. If you are thinking, we've seen the all-time high in terms of gold prices, will we see another all-time high for Bitcoin? And for the record, I still own Bitcoin and I still hold Bitcoin since 2016, never sold anything that I have in my portfolio. My answer to you is this. Only 2 days ago, another capital firm, a big competitor to MicroStrategy called 21 Capital was formed. MicroStrategy owns 5,835 Bitcoin on the balance sheet. This particular company is backed by 3 major firms: Tether, SoftBank, Fitzgerald. They are starting that company with a 42,000 buying of Bitcoin on the OTC market. So, not because I hold Bitcoin or anything like that, but I think we are about to see a huge trend in the digital asset space, and especially in the Bitcoin space. In terms of for gold, any pullback remains an opportunity. But for dollar, I think the current retracement is only momentarily, and I'm sure Jamil would have a lot more to add to it.
Yeah, I think he has to say something on this.
Actually, I want to compliment Naeem on his integrity and honesty then, because back when Trump won the 2024 elections, everybody in the market had the same opinion, including myself. Dollar would get stronger. Initially it did. Gold should be a sell. Equity should be a buy. Reason for this is that you followed the first term where he was very bullish for those specific asset classes, and that was based on Make America Great Again being all about promoting US economic growth. Make America Great Again version 2 is on steroids, but it's about being very defensive, about being nationalistic, about being more insulated and isolating the US from this global economy. And that's where the market's behaving in a much more, I would say, adverse way, not in line with the projections. However, there was also a point of view that many things were priced in. For example, in the first month after Trump was elected, Bitcoin prices shot up. They nearly doubled by the time he was actually inaugurated. The only thing that I can say that I'm not so keen on is this placement of Bitcoin as a safe haven. I will never be able to agree with that because it shows all the prerequisites of a risk asset. But apart from that, the guy's complete on the money. And I compliment him for showing integrity and honesty then, because not many in the market, from an analyst perspective, will say that actually most analysts and economists were a little bit wrong on what the market trends would be 6 months following that event.
Thank you. Ziad, if I can come to you about technology. How is technology, especially AI, reshaping how traders respond to economic data releases or news-driven volatility?
Well, I'll tell you in general, technology and AI specifically actually transformed how brokerage firms operate. And I can see the impact not only when it comes to the, or not only on the traders side. I think the impact is in three main areas. First, everything that's related to personalization. Second, I think it's automation. And third, mainly on the back-end side, it's related to the smart decision making. On the personalization side, I mean, using the help of AI, we're able to enhance the user experience significantly, like from personalized trading dashboards to even, let's say, personalized market alerts based on trading behavior. To even more tools that would allow the users, for example, to get this smart personalized education also based on their trading behavior and much more. So this helps us as brokerage firms to offer this personalized experience and enhance the user experience significantly, where the client is highly impacted and he's happy from the service itself. On the other side also, which affects the client indirectly, it's related to automation, and the operations function usually in the company is highly affected by the AI component when introduced to it. Like, for example, when you're able to automate, significantly automate the onboarding of the client. This reflects directly on the user experience. When you're able to automate the compliance processes, let's say, for example, or even automate the customer support and customer service while maintaining the high level of support and service using AI. This directly also affects the speed for the user when it comes to the service itself, and reduces the error margin significantly. Now, on the smart decision-making side, it's usually related to the brokerage firms. And here I'm talking about strategy. By introducing these tools in the back end, we're able to make better risk management decisions, or perform risk management in a better way because of the assistance of AI. We're able to even detect the fraud or even detect abusive trading behavior using AI tools, which is something very important also for brokerage firms. And much more than that, if I look at it on the marketing side, we're able also to predict in a way or another, for example, the results of campaigns before launching them through tools that depend heavily on AI, and that directly hits on the spending, on the marketing dollar, which is something very valuable for the company. So I think brokerage firms transformed because of AI, and those who did not transform yet are going to transform because it's a matter of survival. But my last comment when it comes to AI, I'm personally not afraid from AI based on the experience that we have and what we're expecting. We don't think that AI is going to replace the jobs in brokerage firms. We think technology in general and AI usually enhance the performance of people and employees and team members. And on the long term, it usually creates jobs. It does not replace them.
If I can add something on AI, I think recently we have all seen, especially in US, new jobs about AI users and how to use tools AI. I think all these AI tools will be beneficial on how you use them. If you abuse them, it can harm a lot of departments in brokers, and I would say because I'm in marketing, especially on SEO, it can be harmful if you use AI. So, moving to Abdallah, are we seeing a shift in dominance between retail and institutional trading volumes in our region here?
Certainly, in such type of market volatility, in such type of events occurring during the trading sessions, the individual traders, they take more faster decisions, they make quicker decisions in the trading. Especially to us as a brokerage company, we are offering them more tools in order to increase their trading volume at the same time, and we are offering them super fast and KYC approvals in order for them to have direct market access and do their trades instantly. And as I described in the first question, during this type of geopolitical shocks, the institutional companies or institutional investors, they tend to go more into hedging and reducing the cost, while trading and increasing the trading in such times is going to be against their strategies if they are going into hedging. So basically, not only in the Middle East, everywhere in the CFDs industry, the retail clients and the retail investors are taking a higher portion of the trading volumes which are being performed in the brokerage companies and financial services companies. Multiple tools have been provided by us as a brokerage firms. In addition, that the AI and machine learning have also supported us as companies into take such decisions with ease. Why? Because with the long history that we as leaders in this region and in the global side, we have lots of scenarios that can be added into the machine learning, which can be lead into similar scenarios to the AI to make better decisions into risk management, which allowed and give us more space into taking more benefit, giving more benefits to the retail investors. And nowadays, it's all about showing the best, showing personalized experience to your traders, giving them a personalized dashboard, as Ziad said, giving them a personalized market decisions, depending on their, like as an example, if he traded in gold and his trade had a stop loss, he will receive a notification on his dashboard on the mobile application, which showing that your last trade was not successful. We recommend that you do X and Y and Z. In this way, the retail investors will be more eager to trade more and to create more volume. So yes, there will be a bigger shift from institutions into retail, empowered by us as brokerage companies.
Thank you. Jamel, if I can come to you, how does increasing regional cooperation influence FX trading in our region here?
Sorry, can you just repeat that?
How does increasing regional cooperation can influence the FX trading in the region?
Well, look, I think that this jurisdiction and the markets that are in the Emirates now, also the region, if we include the emergence of Saudi and Riyadh as a financial center, which I think will take some time, but it's definitely happening. I think it just brings more of a placement of this region and also the region as a whole as more of a, I would say, emerging capital of financial markets. It's not quite there yet when it talks about the legacy of London and New York and Frankfurt and so on, but certainly it's made a lot of progress. And I think that the more that investment firms and very significant institutions are setting up shop in Abu Dhabi as well as in Dubai, it's certainly going to mean more progress. Over the next 5 years, I expect to see that this region, as well as if we include Riyadh as well, is going to become a serious financial center. It's not quite there yet, but certainly it's making a lot of progress. And one thing that I think some of my panelists would agree on is if you're coming from Europe like myself or some other jurisdictions, certainly as financial centers and economies, not only they're plateauing, they're starting to fall back. But this region is continuing to emerge and certainly it's going to become more powerful.
Thank you. And gentlemen, these questions I want to be answered by all of you. What makes attractive Abu Dhabi for the Forex brokers?
Well, we can keep talking about this till tomorrow if you want. But I guess Abu Dhabi is on a mission. I mean, the guys here want to become a global financial hub, and they are on the way, and I guess they are unstoppable because the vision is very clear. The way it's operating, from the frameworks, from the infrastructures the infrastructure that's available here, from the, let's say, ADGM initiatives or other governmental bodies initiatives, it's very attractive. It's sending the message to the global big players to come and establish a presence here, and this is really happening. At the same time, they just don't only rely on attracting those from the outside. I mean, the support that's being given to the startups that are inside also, based on the frameworks that are available here and the infrastructure and the fast track everything. Whatever you want, just fast track. You get the support that is needed. This is a huge, and this is big. Second, I think geographically, Abu Dhabi has a very strategic location. First of all, it's the capital of a very interesting market, one of the biggest markets in the regions and very attractive to financial services companies to come and operate in. What's beautiful about it is that you're able to also target other regional countries and service them from here, from inside the country, and you can expand further towards Asia and even beyond that. And as a marketing person, there's a very attractive point that I like about Abu Dhabi is the brand of Abu Dhabi itself. Like, say for example, you are having a conversation with a client and you're saying, I am a financial services company, I am established or I have a presence in Abu Dhabi and I'm regulated in UAE. You don't have to explain further. And that's the beauty of the powerful brand or the location where you are in. Like, immediately when you say this, these values that Abu Dhabi represents, the brand values are immediately passed to your brand. Because when you're talking about financial services or online trading firms, it's all about integrity, it's all about transparency, it's all about regulations, as well as you're sending a solid message that I mean business. I am serious about what I'm doing, and my service has a certain level. All of this gets passed to you from Abu Dhabi. In our case at CFI, we have this presence and we went further. We're very proud of a major partnership that we have with Abu Dhabi itself through the Department of Culture and Tourism. I mean, even the awareness that we're getting from this partnership, not only in UAE, also globally or worldwide, is huge. So I think, maybe these are major reasons, but they're good enough for Forex brokers and financial services companies.
Thank you, Ziad. Naim.
Thank you. I don't think that I can sell that any better way than you and Ziad. You come from that particular background. But I would echo some of the things that's been said. And I earlier discussed that. I'm sorry if you are in the panel from my previous one. One of the crown jewels from GITEX was AI everything. Abu Dhabi last year, and I was a part of that particular conference, they took that away from Dubai, from GITEX, and brought it here in Abu Dhabi. I've been attending GITEX since before COVID, about 2018 or something. The amount of wealth, the decision makers, and the innovators that I saw in Abu Dhabi this year at that conference, I didn't get to see in Dubai. And that represents the brand, because anyone who would say that, okay, Abu Dhabi, they know they got the wealth, they got the decision makers sitting over here, and then that's what's going to happen. Now, the other, sadly, where me and Jamil, we come from the UK, one of the major headlines on Bloomberg today is like the two biggest property developers in the UK, in the private sector, they are closing their operations and leaving the UK because of the red tape. They're moving where? The wealth is coming to this particular part. So whether you are talking about wealth as an entrepreneur who's seeking that particular opportunity, you have it here. If you are looking for a right jurisdictions in terms of a support from the government, in terms of a clarity for regulations, and we've seen that in the blockchain space, how VARA was established and how that particular space has evolved, you have it here. I have yet to experience, sadly again, in the UK, where I can see a conference, because in Dubai you have a conference called AI Everything this particular week. And one of that particular segment on the conference is particularly focused on young students from school. They are training the next generation with the next generation tools. So I think this could be the place.
Thank you. Abdallah.
Well, I can say that Ziad took the privilege of the first entry. He said everything literally. Basically, what I can add to what the guys just said is that Abu Dhabi and the UAE basically is business-friendly country. They are very supportive. We have established multiple entities in the UAE, one in Dubai, one in Abu Dhabi, and we are in the process of making UAE our financial hub as a group as Ingot. So basically, we know how exactly this country and especially Abu Dhabi is supportive for financial services companies and for other industries as well. And it's a great place to establish a huge business and a huge move forward. It's a multinational country. It has all the doors to all the regions going from LATAM into Far East. So basically, it's the best place, best spot. And yeah, that's it. The rest is with Ziad, I believe.
Yeah, I think he covered everything. Jamal, your point of view.
I think just to summarize what the guys are saying overall is that clearly the future's here. And when we talk about the UAE, we should also talk as much about Abu Dhabi as the world talks about Dubai. I do think that that's a trend that's going to change in the future. We should also give props not only because of the major property developers and other sectors. We shouldn't forget that one of the largest or the largest sovereign wealth funds of the world is based just a few miles away from here, which is ADIA, the Abu Dhabi Investment Authority. So clearly this is an economy and a market that's going to continue to grow. It's going to continue to show progression. And as Naeem touched upon, and as I was also saying in my first part of this answer, will come in or originate from parts of the world which are clearly on the decline. We can't say that about this region.
Thank you. Ladies and gentlemen, now it's your time to ask our panelists any questions if you have any. I think you have covered all, guys. So to sum up, what's one trend that you are going to watch closely in the FX market for the next quarter?
Let's see. Okay, I'm going to make it a little bit more interactive. Obviously, trade wars and economic policies and so forth are so topical right now. If you don't mind, please put your hands up in the room if you believe that Trump is serious about starting a global trade war. I only have one outlier, okay? A couple. Okay, so if the room is correct, and we always go with the majority here, then clearly a lot of the trends we've seen over the past 3 to 4 weeks could potentially reverse over the next coming months. Because we shouldn't forget that, as the institutions are clearly saying, the IMF, the World Trade Organization, and so forth, these policies are going to hit the United States harder than any other economy. Therefore, that voter base that championed this current president and that narrative also going to be hit hardest. Let's see how long they are willing to take such pressure, because things might very quickly flip on its head.
Ziad, what are you going to watch?
I'll leave it. I would like to listen to the opinion of the experts.
Yeah.
I'll just leave the remaining minutes for
If
the
it helps,
expert
we're
people
watching
to say.
things just like everybody else's.
No opinions.
Naim.
Nice.
So this is not a trading advice. This is just a purely for entertainment purposes. Once again, okay? So, okay, look. Jamil was with me. We were in Mexico when the market was tanking. And I showed him the evidence at that time that I bought NASDAQ on that day.
We had a shisha.
And the reason was as follows. This was the, I think, fourth or fifth market crisis that I have seen starting from 2008. When the blood is on the street, that is the time to buy. Andrea, I will add one thing. You know, in relation, I came across this particular sentence in one of the books. The institutions, like educational institutions, they are rated based on the success rate, how successful the candidates are. And someone said, what about brokers? Can they be assessed on the success rate of the traders' performance? Because if that is the criteria, brokers will be the worst institute in the whole world, because a lot of them have like 60 to 65% people failing from that particular perspective. That made me thinking that, okay, we have more tools than we had 10 years ago on any particular platform. We have a more clarity. The trade cost has gone down. The liquidity is much more better than 10 or 15 years ago. Why that is still there? The reason for that one is history repeats, and it also rhymes at the same time. When there is a panic on the market, I'm going to give you some signals, and then watch out for these particular signals. Watch out for headlines which prints that the Dow or the market is down by more than 4 or 5%. You have to see that for a week, continuously having that in order to have that particular position, good position in. Number 2, panic surges to a level where government officials steps in and then they say, short selling is banned in the market. You know this is a real panic on the market. The third biggest sign to buy in the market comes when the Federal Reserve or the central bank kicks in and then they say we are announcing the quantitative easing in order to restore confidence. Now, 2 weeks ago when we were smoking shisha in Mexico, so we already had signals from that particular perspective. Market was dropping continuously. NASDAQ was down more than 27% from its all-time high. 30% is when I'm very happy to go and deploy my capital. Number 2, short selling banning. That information wasn't ignited in the United States, but across in Asia, it was already in the headlines that short selling is not allowed. The third biggest signal was that the Fed already started to talk about the QE easing, even though it didn't happen. So at a 30% drop, you begin your shopping list, what to buy. At a 40%, you start buying. When market drops 45% plus, then start deploying margin. And I hope that would increase this percentage of the failure for brokerage for once.
I think we get jealous. Next time we need to be with the shisha too.
It wasn't very good in Mexico, by the way, I have to be honest.
Abdallah, yeah.
Well, for me, it's very simple question. I always and have been always watching gold and indices as well. I can't say anything about my thoughts because it will not be added as an advice. But for me, these are the hot instruments, and I believe all brokerage firms have their highest volumes being traded on these three instruments: gold, Dow Jones, Nasdaq, and of course Euro USD. So basically, these are the hot instruments which have been and always will be watched by myself and the majority of the traders.
Thank you. There is a question. Yes.
Thanks for this amazing panel. Thank you very much. When it comes to Trump, by the way, I work for the United States Press Agency. When it comes to Trump, Donald Trump, I don't know whether the AI would be able to predict his behavior, but maybe you should use that when your behavior patterns observed by your AI system. My question is regarding the what you said, Naim, sorry, regarding the next trend of cryptocurrency, because Christian Lagarde announced 2 weeks ago that by October we're going to be for the 27 member states, going to go from the euro to digital euro. Is that good news or bad news for your panicking market here in the MENA? Thank you.
Thank you for that. That's a brilliant question. Now, this has been the craze that the CBDC, will it kill Bitcoin? CBDC is still backed by fiat, right? And if I can break it down, CBDC means central bank's digital currency. It is still backed by its own currency, euro. Currently, the main reason for the dollar downfall is what? Trade war. People thinking America first. Yesterday, the US Treasury Secretary spent more than 5 minutes just explaining one marketing thing. America first does not mean America alone. And Jamil would witness in the last week or so, people have been talking about what Trump is doing. He's making America alone. That was a marketing strategy by the White House, the US Treasury Secretary, standing and telling the world, we are not alone. We are still with the rest of the world. Just explaining that particular element. So CBDC cannot kill, because they are still backed by fiat, whatever currency, whatever country they are in. With respect to Bitcoin, it is the next digital gold. Again, you know, I'm a firm believer, and then I have not sold it, and I will not sell it yet. So I think with respect to so many institutes buying and with a limited supply, the only path forward is to the upside.
Thank you. Unfortunately, our time is up. So, gentlemen, thank you. It was an honor to be here with you. Guys, thank you everyone for watching, and see you to the next Money Expo. Thank you.